Welcome to the channel, guys. My name is Jess. So the last week of Bitcoin price action has been absolutely insane, guys. We saw a rapid move all the way down to $49,000 in one of the largest liquidation events we've seen in the crypto space, followed by a huge recovery back up to $62,700 in the last 48 hours. Was this recent move enough to signal that the buyers are back in control, and what can we make of the recent price action? Let's dive into our analysis today to cover the recent daily candle close, the 3-day candle close, as well as the significance of these short time frame charts. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel for regular analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alright guys, so diving right into the charts here, we're on a daily time frame. You guys can see what an absolutely insane week it has been for Bitcoin. On Monday, we saw a flash all the way down to $49,000 in a massive liquidation event. And then on Thursday, we saw this really huge and rapid recovery all the way back up to $62,700. So the cause of that was on Thursday, we had US jobless claims data come out over here at 10:30 at night. And that is when we saw the price shoot past its short time frame resistance here at $58,000, right, which we had been kind of rejecting off for a while there, and shot past our weekly resistance at 60K as well. So that's why the price is currently kind of hovering around 60,600. And as we move into this weekend period, we're starting to see a little bit of a slowdown. So 24-hour volume is down by 30% and 24-hour liquidations are down by 51%. So we're starting to see a slowdown now, but regardless, the price action is still important to look out for. So let's go ahead and dive into the recent daily candle close, the 3-day candle close, and then move into our short time frame analysis. Before we dive into the analysis, let's hear a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in setup rewards when you create your account using the link in my bio. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So taking a look at our two most recent daily candle closes, there were a couple things that we did need to see in order to signal that we had a real probability of a bullish continuation to the range high, first of all, and a potential breakout of our massive descending channel. And that first thing that we needed was a close above our 200-day moving average. And I've spoken about the reason why that 200-day moving average is so important in prior videos, but essentially it represents a macro uptrend, right? And it also coincides really well with that prior bull market uptrend that we've recently lost in that massive crash. So generally above the 200-day moving average, we are in, somewhat of a bull market. We should be continuing in that bullish trajectory, and so on and so forth. So falling below the 200-day moving average was a really big warning sign back here in July when we first lost the bull market uptrend as well as the 200-day moving average. But luckily in that next series of daily candle closes, we did manage to reclaim this level over here at 59,600 and move up to get a range high retest. However, in this most recent crash that we've seen here, we can see that rejection that we've had, right, from that 200-day moving average. We've fallen below. We had a candle close just below that level at 62,000 or 61,500. And we can see from that next daily candle close as well that we had a proper rejection. We've gone back down. We've formed a red candle there. And we are now retesting that weekly support at 60,000. If we move over onto our 3-day candle close, we can see a sort of similar problem. So again, what we needed to kind of establish was a move above the midline of our Gaussian channel. And we can see examples of why that midline is so important just back in our prior start of the bear market, right? We see a fall below the Gaussian channel over here, right? We saw a pretty big correction there. I think it was about 20% before we bounced on the weekly leading span B on the Ichimoku. So we had a second rally over here to $48,000, but upon rejecting off the midline over here of the Gaussian channel, which has acted as a point of resistance, we entered a macro downtrend, and that is when the bear market really started to come into, well, not really started, but it started to gather some steam, right? We started to see that massive correction all the way down of about 70% to 16,000. So if we take a look at what's happening over here, we can start to see again that recent 3-day candle close that we've just had over here was yet another rejection from that Gaussian channel. We've had another candle close just below that midline. And so what we're seeing in terms of these recent daily candle closes is that, yes, despite the fact that this move was huge, all the way up to 62,700, it has not been enough to signal any sort of macro confidence, macro bullish confidence. Like I spoke about in my last video, we talked about, okay, yeah, we've had a massive move downwards. This cycle is not exactly following all the traditional price cycle, validations. For example, we lost the leading span B on the 3-day Ichimoku, which had historically signaled a macro downtrend, but the fact that we had structural support was a good sign. But what these most recent daily candle closes tell us is that despite the bounce from structural support, we're still not seeing enough strength to really signal that macro bullish confidence once again and see that retest of a range high. Now, this is where the short time frame price action becomes quite relevant, because we want to know on the short time frame, when are we going to see either a break upwards, and in that break upwards a move towards our range high, or a break downwards, and why would that break downwards be so detrimental this time? So moving over onto the 1-hour charts, guys, you can kind of see the way that Bitcoin is kind of approaching this next decision period. We're right up against a level of resistance here at 62.5 to 63K resistance, right? And we're moving in this uptrend. So we're kind of getting to that period where we might start to see some sort of decision either in a bearish correction or a bullish continuation. And the 62.5 to 63K level of resistance we know is significant, because not only is it a high time frame trigger point, right? Because we can see that every time we break above that level, we generally move to the range high. We reject, we move to the range low. But we also know that it coincides with our 200-day moving average, that blue line, and what I forgot to mention before, our 50-day moving average. So they're both moving averages, yes, but they do serve different sort of distinctions. So while we're above the 200-day moving average, we're in that uptrend, that macro sort of uptrend, where we should kind of expect that breakout, right, in a long-term bullish continuation. But above the 50-day moving average, we can expect a move at least to the range high, right? We can see that repetitively over the course of the last 4 to 5 months, where a move above that 50-day moving average generally results in that range high retest, as opposed to below 50-day moving average, range low retest. Okay, so those are the two key sort of indicators that we're looking to clear above on that daily time frame. And in order to do that, what we need to see is a reclamation of this level of resistance here at 63K as a base of support. And that means maintaining our current short time frame uptrend, which has started here from this retest of $49,000 with 2 points of confluence and validation from our RSI. So a maintenance of our short time frame uptrend and a break of our horizontal resistance. So whether or not that looks like some sort of ascending channel, or whether or not it looks like some sort of ascending triangle formation, regardless of how the price action develops, what we need to be seeing is that break upwards. And that is the only thing that's going to tell us that we might be getting that range high move. So that would, and it needs to be sustained, by the way, on this daily time frame. So we need that short time frame break, but it needs to be sustained on a daily time frame to get that move upwards. We can't be getting these little wicks over here like that. That's not really useful to anyone, right? So it wicked above the 200-day moving average, but it didn't really close there. So it was a rejection. Moving into our bearish case scenario, that is going to be triggered by a breakdown of our short time frame uptrend as opposed to a break upwards of our horizontal resistance. And so what that's going to look like, first of all, is not only a loss of our uptrend, but the horizontal level of confluence here at $60,000. So this high time frame weekly support that we've had here for the last 4 to 5 months. So the breakdown of that is going to be triggered by a loss of this level over here, this change of character, and our prior sell side liquidity levels. You guys can see those wicks there, and that is exactly at 59,500. So a loss of 59,500 confirms a loss of our high time frame support, and in that, move downwards, the first thing we will very likely see is a bearish continuation to fill this gap here we have on the short time frame. So a move to our local level of support on the short time frame at 57.2 to 57.9 thousand. That's the exact same level of resistance that we had cleared in that recent jobless claims data, right? That move upwards. And if you pull up the liquidity swings indicator, you guys can see that kind of confirmation there that it is a level, a change of character level, so a level of significance. Moving below 57.2, if we continue to sustain that bearish continuation and we don't manage to find support here and bounce, that is when the price action starts to get quite bearish, or potentially quite bearish, because then we move to the next level of support here at 53.8 to 54,000. Now that level is significant because it is also the range low for our macro structure, right? So that means that we will be seeing another retest of the base of our structure before we even get our range high retest. So this isn't a rejection from the top. This is a failure to sustain a bullish move and a rejection back downwards, right? So that's much weaker. That's much more bearish than a rejection from the range high. Now, falling below this range low here at 53,800 is when things start to look very, very bearish, because below that, the next level of significance that we have is all the way down here at sell-side liquidity at $49,000. If we go back to our short time frame charts, we can see that it would also mean that we have stopped forming these higher lows here on the charts, and we are entering a short time frame downtrend, which again suggests a bearish continuation. So that bearish continuation takes us down to this level over here. We have a level of support at 49,800 to 51.4, and if we do not bounce there, if we fall below this level of support, we fall below sell-side liquidity at 49,800, that is when we really start to enter a macro bear market, because we have guaranteed the loss of our descending channel. We've had a bearish breakdown, and in that circumstance, after losing our 200-day moving average, after rejecting from our midline of the Gaussian channel and closing below our leading span B on the 3-day Ichimoku, it is very likely then that, you know, we are not going to see some sort of massive reversal and a bullish continuation on the higher time frames. Of course, though, we do have levels of support there. Don't want to end the video on such a negative note. So we do have some more levels of support to look out for, so there's no reason to panic just yet, but definitely some price action to be looking out for over the next week. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trades with exact entry points, targets, and stop losses. And if you are a trader, sign up down below to Bitunix to get 15% off all of your trading fees and up to $5,500 US in rewards. I'll catch you guys in the next one. Bye.